Hi guys, it's Stock Curry, and we just got some shockingly bad economic news that was extremely bearish. So why did I buy call options today? I'm gonna explain in today's video. So let's get into it! First off, over the weekend, we got news that China's economy was slowing down, and now it looks like it's getting even worse. This slowdown is the worst since the initial pandemic outbreak in 2020. Both consumer spending and factory output tumbled in April, while growth in the infrastructure investments, which Beijing had been counting on to prop up growth, dropped sharply. Meanwhile, China's jobless rate surged to a 2-year high of 6.1%. Now, while part of the slowdown can be explained by the lockdowns in China, the fact remains that China is in a trend that started before the most recent lockdowns of an economic slowdown. The lockdowns have simply exacerbated and sped up the rate of the economic slowdown in China. Unfortunately, this is going to have a negative effect on any company that does business in China, including Apple and Tesla. Tesla was down 6% today, and now Michael Burry, who famously shorted the housing market in 2008, just placed a short against Apple. Michael Burry's hedge fund bought over 2,000 put options on AAPL. Now, do keep in mind that even though the economic news in China is extremely bad and it is causing stocks like Apple and Tesla to fall, it doesn't mean that Michael Burry is necessarily correct in buying these put options. Michael Burry has been wrong in the past, and it should also be noted that Berkshire Hathaway just purchased $600 million worth of Apple shares. So certainly some of the two most well-known people are going at it right now, with Berkshire Hathaway thinking Apple's going to go up and Michael Burry thinking Apple's going to go down. Now, who's right will remain to be seen. Personally, I think Michael Burry's right, but again, we'll see who's right in the future. Now on to the shocking economic news. The New York Empire State factory activity was expected to rise 16.5. Instead, the index showed negative 11.6. This is down from a plus 24.6 in April, a 30-point drop. Keep in mind that any number under zero represents deteriorating conditions amongst our factory workers, and the number came in at negative 11.6. Now, the reasons for this seem to be a combination of supply chain constraints as well as rising inflation, which is lowering demand. In any case, what this ultimately means is that our GDP, or gross domestic product, is declining. And as GDP declines, that is what ultimately triggers a recession. So it looks like this is just another indicator that we may in fact already be in a recession. And in fact, Elon Musk came out today and said that he sees the US as probably in a recession lasting up to 18 months. Now, it should be noted that Elon Musk's viewpoint is in complete contradiction with most economists, although a lot of economists have been proven wrong lately, especially with their thoughts on things like inflation being transitory and inflation coming down, and it's just hasn't really happened yet. However, that said, I do want to point out that with the factory data that we just got out of New York, there is a good chance that Elon Musk is right here, that we are currently in a recession. Now, as far as it lasting 18 months, I would just say that during any major recession, the average amount of time that it lasts is 18 months. Sometimes 12, sometimes 24, but on average is 18. So Elon Musk isn't really saying anything shocking here. All he's doing is saying, look, based upon the factory data, it looks like we're already in a recession. I agree. And Elon Musk is also saying that it may last 18 months, and that's just the average amount of time a major recession lasts. So again, nothing shocking here, but it is interesting that he's coming out and saying this, while most economists are still saying, no, we're not in a recession. It's not going to happen for at least a year out. So we'll see what ends up happening. For sure, 3 months from now, we're going to know for sure if we're in a recession or not. So right now, it's all a guessing game. We won't actually know for another 3 months. Now, getting into a few other things that Elon Musk said, over the weekend he said that the Twitter deal was on hold as they try to figure out just how many fake and spam accounts are actually on the platform. In other words, Elon Musk is saying that Twitter has given materially infactual information or false information, basically saying that they claimed a certain number of users. In reality, a lot of those users are fake. And therefore, because Twitter has not given material information, more research and investigation has to get done before any sort of deal can go through. Now, there's a lot of speculation about why Elon Musk may have done this. I personally think it's because he's trying to negotiate a lower deal, trying to get Twitter for a lower price. But whatever the reasoning is, it doesn't look like the deal is off the table. It just looks like they're doing some more investigation, some more due diligence. Now, it's very possible that Elon Musk is doing this in order to say, hey, look, you misrepresented the company, you gave materially false information, the deal is off and there's nothing you can do about it, essentially in a way of sort of getting out of the $1 billion breakup fee that he has to pay. Unfortunately, even if this does go through, there's a good chance he still have to pay the $1 billion breakup fee. So I don't think that's the case. I think he's just using this to try to negotiate a lower deal. And in fact, that's exactly what Elon Musk said today. He said the possibility of a Twitter deal at a lower price was not out of the question. By the way, he made all of these statements during an All In podcast that's hosted by people like Chamath and David Friedberg. Now, with all of the issues surrounding the Twitter deal, the stock price is now below where Elon Musk disclosed his stake at. In fact, if we take a look at the chart here, you can see the massive drops that we've had over the past few days. Now, the other thing that I want to point out here is that Twitter is now at a support level. It's not a particularly strong support level, but it definitely is a support level. So there's at least a chance that Twitter might stop falling here and start going back up. In fact, that's the reason why I opened a vertical put spread on Twitter today. Essentially, this vertical put spread will make money so long as Twitter either trades flat or goes up slightly. Essentially, I'll make money just so long as Twitter stops falling. Now, I also bought a call option today on the overall market, and I want to explain why. In my last video, where I talked about why stocks were looking like they were going to go up, I talked about the technical analysis, and I also looked at the market psychology and how the market psychology was extremely bearish, which usually points to a short-term bottom in the market. Now, I want to give you an update on the technical since we've had another trading day and show you what I was looking at and why I decided to open a call option today. Let's start with the QQQ, which is a NASDAQ 100 ETF. On Friday, I said that while it looked like we might get a rebound, the play was still very risky because we did not yet have any confirmation of a rebound, and that's still the case. Even after Monday's close, the candles are still below all of the EMAs. However, the one thing that looked very promising to me was the fact that QQQ managed to stay above this support level at $298. The other thing I looked at is how the MACD histogram is starting to rise and how we're probably 2 or 3 days away from a golden cross in the MACD. Now, of course, the MACD is no guarantee. As we saw 2 Fridays ago, the golden cross got rejected and the MACD histogram started falling again. Now, this is attempt number 2 at a golden cross on the MACD, and I'm hopeful that this time it actually holds, especially given just how bearish the market psychology is right now. So QQQ is something that I bought a call option on Friday. Now moving over to SPY, this is an S&P 500 ETF, and we have a very similar situation. The S&P 500 did not manage to get above this resistance level, although it did do so intraday. The other thing I want to point out is the MACD, just like on QQQ, is rising and about to form a golden cross. Again, no guarantees it'll actually hold, but this is attempt number 2. And the fact that the QQQ managed to stay above a support level, and the fact that the S&P looks like it got above a resistance level, at least intraday, all of that is signs to me that the market wants to go up. It's just struggling at this little bit of resistance line right here. I think as soon as we get above this resistance level, we will break out and continue going higher. So that is why I bought an SPY call option today. Now again, these call options are extremely risky because we're essentially trying to time the bottom, and we're hoping that the MACD holds up this time and does in fact form that golden cross. Essentially, we're betting on the technicals giving us confirmation of a rebound based upon market psychology pointing to a rebound. It's extremely risky, which is why I kept these position sizes very small. In fact, I opened exactly one call option on QQQ and exactly one call option on SPY because of the very high risk with these call options. Now, once we do get that confirmation, if say Thursday or Friday we get the golden cross, we have the confirmation of a rebound, then I'll be very comfortable loading up on more call options in order to ride the rebound back up. So at that point, I will retrace my Fibonacci retracement levels and we'll figure out how high I think it can go, and we'll play our call options based upon that. Now, if you guys want to know every single thing that I buy and sell before I even place the orders, as well as why I buy them, so that you're not getting this information a day late in a YouTube video, then you can come join the VIP Discord. In the VIP Discord, I give people everything that I'm buying before I actually place the order, and I also explain why I'm placing those orders. So if you want to come join the VIP Discord so that you can join these plays with us, then come sign up. You can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Finally, I want to remind you guys, if you haven't done it already, to please hit the like button and subscribe. And if you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you guys got a lot out of this video. I hope you have a lot of success trading. And just a quick reminder that if you ever don't see a video from me, go check the community tab on YouTube. Just go to youtube.com/stockcurry and click on community, and there almost 99% of the time you're going to find a post from me giving you a quick update and just explaining why I wasn't able to produce the video for the day. So again, if you don't ever see a video from me, just go check that community tab. Alright guys, hope you have a lot of success trading. I will see you tomorrow.